Hello, you're welcome to FinInvest Niger. My name is Tom Princeville, and I've been investing for the past 20 years, and I'm a certified securities and investment specialist. In the course of this video, I want to carry out fundamental analysis on this company called Computer Warehouse Group. It's a company in the ICT sector of the Nigerian Stock Exchange. I want to determine precisely the company's suitability for your portfolio as an investor. Let's dive into it. Now, the company had a revenue, as at last year, the full year 2025, the revenue recorded was 65.659 billion naira. 65.659 billion naira was the revenue as at last year. Then for the year 2024 full year, the company recorded 45.353 billion naira as revenue. So you could observe the change here from approximately 45 billion to about 66 billion naira. All right, that is amounting to a difference of about 20 billion naira, in growth. Now, we look at the company's gross profit. For the gross profit figure here, the company made a gross profit of 16.106 billion naira. 16.106 billion naira out of a revenue of about 66 billion naira. And the gross profit here for the year 2024 was 9.894 billion, 9.849 billion. You could note that there was an increase here from approximately 10 billion to 16 billion naira, making it a difference of 6 billion naira in growth. Generally, when you're analyzing a company, you don't just concentrate on the figure, you concentrate on the growth. Is there growth in the entire process? Discover that in both cases here, the company recorded growth in revenue as well as growth in gross profit, which is something quite encouraging. We now come to the company's profit before tax. For the profit before tax figure, the company made a before tax profit of 8.011 billion. 8.011 billion was for tax, as against 4.513 billion. All right, so you discover that there was an increase of approximately 6 billion to 8 billion, which is 2 billion naira difference. There's still that growth element is still there, from about 6 to 8 billion. That's 2 billion naira in growth. Now we come to the profit after tax. For the profit after tax, the company recorded a profit after tax of 3.044 billion in 2024, as against 5.608 billion in 2025. So you discover that approximately the figure here rose from 3 to about 6. Let's say around 3 billion naira or 2.something billion naira, in difference, in a profit after tax. So we now come to the most important figure in this particular analysis, and that is the earnings per share. This is the most important figure here. You discover that the earnings per share, there was a growth. It grew from 1 naira 22 kobo to 2 naira 24 kobo. From 1 naira 22 kobo to 2 naira 24 kobo. There's almost 100% increase in growth in earnings per shares. This particular figure is very important because this is what governs, the rise or fall in share price. Whenever there's a growth in earnings per share, the company shares will grow. And whenever there's a decline in earnings per share, the company's share price will drop. And this is the particular figure that determines the level of dividends a company can pay out, because generally, companies pay out dividends based on their earnings per share. The dividends can never exceed the figure of the earnings per share. Now, we are through with this segment of our analysis. Now, let's consider the other segments of the company analysis. And of course, this entire table, represents the company's balance sheet, the profit and loss statement, as well as the cash flow statement. So the entire three, factors are combined in a single table here. Now, we will look at the company's share price here, which is 24 naira 40 kobo. 24 naira 40 kobo is the share price, the current share price. And the shares outstanding is 2.5 billion. The company has 2.5 billion shares outstanding. And not only that, the market capitalization is 61.6 billion. All right. And how do you arrive at this particular figure? The market cap is by multiplying the company's share price by the number of shares outstanding, and that will give you the market capitalization. Now, the essence of this market cap is to tell us precisely, how big or how small the company is. All right. So in this case, the company isn't all that big. It means that if you have, this particular amount of money, you will be able to buy the company. All right. If you have 61.6 billion naira, you can buy the whole company. Okay. And if you have like 30 billion naira, you can buy half of the company. Okay, and you become a majority shareholder. That's the essence of the market cap. It shows you how big or how small the company is, or how capitalized the company is. We now come to the issue of the PE ratio. The PE ratio here tells you how expensive or how cheap the company is, in relation to other companies in that sector, or with the overall, broader market in mind. And so discover that, this particular figure is arrived at by dividing the share price all over the earnings per share. Okay, the share price 24 naira 40 kobo divided by 2 naira 24 kobo will give you the company's PE ratio. So in this case, the company has a lower double digit PE ratio, so it isn't all that, it's not that expensive. All right, just uh, a lower double digit PE ratio. So I think it's okay for a full year result. And now the equity per share here actually is the equity divided by the number of shares outstanding. So the equity here simply means the difference when you subtract the total asset from the total liability of the company, you have the equity or the book value. So in this case, the equity here is 10.04 billion. 10.04 billion is the equity in this case. So for the equity per share, simply divide this particular figure by the what? By the number of shares outstanding, and that will give you 4 naira 36 kobo. And so what is the essence? What's the importance? What the significance of this particular figure? The importance is that you use this figure to make comparison with this. Okay, and so the narrower the difference, the less expensive the company is, and the wider the difference, the more expensive the company is. If you ever come across a company where the share price is less than the equity per share, that company is very, very cheap. You are advised to buy it instantly without asking too many questions. All right. In a case where you happen to come across a condition where the company's price is lower than the equity per share, go ahead and buy the company, because it hardly ever occurs. It's very, very rare, but it might occur, along the line. So go ahead and buy it. Well, in this case, the difference is somewhat wide, which shows that the company isn't that cheap when you use this particular analysis. We now come to the cash. The company actually, has a robust cash position. This is a cash at hand, cash in the bank, as the case may be, is 5.21 billion naira. That means that, a significant portion of the company's profit is retained in cash. Imagine the company making a profit of over 8 billion naira and is keeping that 5 billion naira in cash. Some companies make profit, but unfortunately, they have a negative cash balance. But this company, as we all know, as we could see from the table here, has a profit after tax of 5.6 billion, and then it retained 5.2 billion naira in cash. This is quite commendable. So the company's cash position is robust. The company can meet up with emergency expenditure without resorting to borrowing from the bank. So this company is fundamentally strong. It's fundamentally strong and sound. The Computer Warehouse Group, and having done this analysis, I need to arrive at a conclusion, and so I'm giving this company a buy recommendation. Although the entire exercise here is for educational purpose, but at the end of it all, this company has a buy recommendation. And so if you are an investor, you are interested, you may want to make this company, a part of your portfolio. Please like this video, share this video, and don't forget to subscribe to this channel, because by so doing, we'll be able to reach out to a wider audience with this particular message of investment in the Nigerian stock market. In the US, over 40% of the population is invested in the market, but in Nigeria here, the figure is less than 4%, as against over 40% in the US, because of lack of awareness. So I want to reach out to our fellow compatriots with this important message of investment, and I'm relying upon you to help me share this particular message. Thank you for watching. You could still consider other videos in my channel as well.